Hi, welcome back to class. This video session, we're going to be talking about adjustments and financial statements. And I'm going to do that by looking at our sample problem. So let's take a look at our sample problem for session 5. I always like the way they come up with names for their sample companies, right? I mean, here we are. The dancing quarterback. I suppose they did this during football season. But one of the things that you can see is you see the trial balance, and they're doing it for the period ending January 31st of 07. And you see your accounts listed here, and you can see that you have prepaid insurance of $600, and you have, a variety of the standard accounts that you're going to see on your trial balance. So remember, you list all of your accounts, and you see salary expense and rent expense. So you're listing the accounts in numerical order, starting with your assets, and you can see everything balances. And now we have to make some adjustments. And as you would imagine, periodically, whenever you see on your trial balance prepaid insurance, that means you've paid it for a period of time, and it's now at the end of a period of time, and you have to make an adjustment for the expired insurance. And that's where you start to see your adjusting entries. And we have to make an adjustment to properly show the level of insurance that you have left in your prepaid account. And you also have to absorb or show the expense that you've incurred by using up that prepaid insurance in this case, or using up some supplies, or showing off your depreciation, or showing some wages that you actually might owe somebody at this point in time, but that you haven't paid yet. So as you know, some people get paid every couple of weeks, and that ending period may actually overlap a closing date. And in this case, our closing date is going to be January 31st. So now what you have to do is you see what's required. We have to prepare our adjusting journal entries for the 4 adjustments necessary as of January 31st, 2008, it's showing at this point in time. And then we have to complete a worksheet for the dancing quarterback. So we're not going to worry about the dates so much as we are going to worry about what our adjusting entries are. And so one of the things that you remember as we showed it, that we had the expired insurance, that means we'd used that insurance up of $350. And so your first adjusting entry is where you're going to, in effect, show your expense. You've used your insurance expense, and remember, you always show your debits first. So you show that $350 of expired insurance as an insurance expense, and we have to reduce the asset account of prepaid insurance by $350, and so we credit that account. So our first adjusting entry that we show to write off expired insurance is we show a debit to insurance expense followed by the credit to prepaid insurance, and that way we're going to be properly showing the amount of prepaid insurance that we have left in that account. We then go to show supplies used, and just as you would imagine, when you use up supplies in a business, that's an expense. And so we're reducing the asset account of all those supplies sitting in the back room. So we show supplies expense written down by $90, and then, or the supplies expense account increased by $90, and our asset account of supplies reduced by $90, which would be a credit. So you show the debit to your expense account and your credit to reduce your asset account. The next one is the term depreciation. And as you know, whenever you buy a car, there's a certain amount of depreciation that's going to occur. In this case, we're going to show the depreciation on equipment. And we get to book that as depreciation expense. So that's a cost of doing business and of owning equipment that reduces in value over time. So we now start to show that as depreciation expense for the period of $120. And then we have an account that is going to be shown on our balance sheet as accumulated depreciation. So on our balance sheet, ultimately, we will show this account right below the equipment that we show as depreciated. So we always show the equipment at the original purchase price, but then we show an accumulated depreciation account right under it that shows the amount of depreciation and, in effect, the reduction of the value of that asset. But we maintain that in an accumulated depreciation account. So again, as you see, we're showing an expense account that we're adding to, and we're reducing an asset, in this case, by developing that account called accumulated depreciation. And then we have to show the wages. We have salaries expense that we're going to show for a specific period, in this case of $200. And we're going to show that, then establish that salaries payable. This is to show wages that, in effect, the employees have earned, but we're not paying until after the period. So again, you start to see the debit to an expense account, and in this case, a credit to a liability account of salaries payable. So just like you would imagine, adjustments are done to properly show new expenses that have been incurred during a period, reducing assets appropriately, and then also establishing a liability if we have to pay our employees. And you know, as an employee, we all want to get paid, but we want to show the expense that has been incurred during the period that it was incurred. So I hope this helps you with dealing with adjustments. Be sure to let me know about any course questions by sending me a private message within the course site. So take care, hope you're enjoying bookkeeping, and we'll see you again soon in another upcoming video. Bye-bye.